This is really one of my favorite scenes from the Warriors. Cyrus is talking about the numbers, and especially in crypto. In my opinion, there's nothing more important than the numbers. Today I'm going to revisit pivot points, value area, and I'm also going to be talking about our newly released deviation levels with percentages and how to use price levels to really read, and just the numbers to really read what's going on in the markets. Okay guys, the day has finally arrived where we're releasing this web app out into the wild, is my brother calls it. And we're going to, if you're watching this, we've probably already added this web app to our website. We're going to offer this app at a reduced price initially of $17.95. I want to get the price of the app and the community chat eventually up to $39.95. Even that certainly wouldn't break anyone's bank. It's at $17.95 a month. It's like 60 cents a day. Now, these are the same deviation levels that I've been sharing on my Twitter. I only share Bitcoin on my Twitter. So if you're one of those people that absolutely hate waiting on these numbers till after 12, good news for you. Purchase the app, support the site, and you can have the numbers when you're ready to have the numbers, when they actually come out, which is going to be just minutes after 7 o'clock. This will update automatically. We're not just sharing the Bitcoin devs. We've got some coins in here, and we'll be adding more as we grow and maintain this web app. I've talked about how to read the app. These are the percentage moves. These are the levels. They're set so that you can copy paste them. These levels are good for one day, the day of, and that day is always denoted there. You can copy paste these levels and put these levels on any chart. This is the probability percentage of us reaching or touching that level, whatever level on the day. This is a graphical interpretation. You can see where we start with more light here, and we've got that dark connotation annotation there, and it just it shrinks as the probability shrink. So I think that's, it's a really cool graphical idea my brother came up with. Now, I want to also share what's cool about deviation levels is, well, the formula that we're using, that we came up with, it's not data that's based on just one day. I'm going to talk about other key levels, pivot points, value area. I'm going to intermingle these levels so that when you've heard all of this, you should be able to just look at the numbers at the price level and know exactly what's going on and what's happening in the day. But all of the other levels I'm talking about, psychological levels, round and whole numbers, value area, high, value area low, pivot points, all of those are just derived from the data of the prior day. The way, in my opinion, the way that you can really tell when there's strong or weak pivot points, or when the market is really trending a certain way, is looking at the numbers, just like Cyrus was talking about in that video on the intro. It all boils down to the numbers and just being able to translate those numbers into a picture and a story of what's actually happening in the market. That's what he was trying to do in his little speech, in my opinion. He was translating the numbers into a picture of the state of what was going on with the aggregate of all of those gains. So let's just dive right in, and we're going to talk about pivots. I'm going to go back through and review pivot points. Okay, this is a pretty bear chart here. I've got my pivots, these little bubbles here. Those little bubbles, that's R1. This is central pivot. That's R2. That's R3, way up there. This is a Euro USD. I'm on an MT4 chart now. And this yellow line here, often you'll see me talking about psychological numbers when I'm tweeting. It just means whole numbers. Round numbers and whole numbers. These are psychological numbers. We go into a store and we'd rather buy something at $19.95 than $20. What's so special about $20? There's that psychological level. Everybody talks about being a millionaire. What's so special about being a millionaire? There's that psychological level, that whole psychological level. That's what's important about these whole numbers and these round numbers. This is central pivot. I want to stop a minute and talk about what is central pivot and what is a pivot. A pivot is like a turning point in any situation where something turns around and it can pivot and go in a different direction. Okay? The formula for the pivots is the high plus the low plus the close divided by 3. So what you really have is the typical or a central price that was there for the prior day. So that's a crucial and pivotal area. We all know the story of this guy here, Spider-Man. When he was looking to get paid for his exhibition match in wrestling, and a guy came and stole the money from the promoter, and he didn't stop the guy. It was a pivotal point in his life. He didn't realize it at that time because it hadn't happened yet, that this guy eventually came and had an altercation with another robbery, which resulted in the death of his Uncle Ben. That's what pivot means. That pivotal change in the atmosphere, in your life, in your situation, etc. With that being said, pivots aren't often a great place to seek and find support or resistance on a chart, but they are a great place to denote this is where the chart turns south, and above this is where the chart turns north. Hold for just a second. Okay, back. Had to deal with the bad dog. So you're watching a chart. We're trading below pivot. It's Euro USD. There's pivot. The day starts. What's the easiest thing to do, or most probable thing to do? Only the numbers and only price is telling you this. I don't have just any other lines on here but some of these key lines. Right here, price is saying that here's our pivotal level on the day based on the price action of yesterday, and we're below that level. And so it's going to be easier to short or sell than it is at this point in the day than to go long. All you needed was the numbers. All you needed was price. Let me show you another. This is a little trick. When I very first started trading and discovered pivots, I used to use this a lot to ascertain the trend. Since I know that the pivot is the center of the prior day, what does it mean if this is pivot and then the day before this is pivot? And you see how we're stopping at the pivots? See those wicks stopping at the pivot? But you also notice that prior day central pivot was higher. Why are we stopping at the pivots? Because a lot of guys, even the guys that are making markets, they know that this is a pivotal day. This is a pivotal number because there are going to be guys that are willing to buy there. There are going to be guys that are willing to sell there because pivots have been around since the early 80s. Made by a man named Manning Stoller. He was a floor trader. Okay. The day prior to that, there's central pivot and it's even higher. Now, we talked about that pivotal place during the day. Here, the day starts. What's the easier thing to do? We're above. We are above pivot. So, where's the action? Most likely going to be to the upside. And it keeps you want these levels to prove themselves. You want to see the market get to pivot and have a reaction there. And the reaction was up. And then all of a sudden the reaction's up again and there's this big candle and it pushes below pivot. Okay, remember this pivot was just designed off of the data from the prior day. Some guys, they'll get into a trade and they'll say, well, pivots don't work. It didn't stop there. Firstly, this is just going to be data from the prior day, and it's not that it doesn't work. We saw it bounce several times, but you're trading. You're not cooking a set it and forget it meal. You're trading. Once we've started to break the pivot, what does that indicate to you? That we're now the pivotal point in that day. What's probably going to be easier to trade down, to sell? In the rest of that day, that's what happens. Now, we've looked at pivots. Now let's talk about value area. What value area is built on is that the prior day, it's going to calculate where was price 70% of the time. That area is called value area. Since price is there 70% of the time, the prior day, that's where most of the buyers and sellers met. That's where most people agreed there was value. Now, again, just looking at the numbers, if we start to break down below this line, this value area low, what's probably going to be easier? To trade in the direction of the market. You already know that we're breaking out below where we were on yesterday. Well, wait. We bounced back up and we broke value area and we came back. Okay, well, that's, for one, this is value area of the day. I really shouldn't be showing you like this. But for two, the second, just like with the pivots, if we're above value area, then the direction of the day isn't down. There's value. The market's saying in the numbers that it's finding value in that same area that it did for the prior day. And that's what it means to be inside of this value area high and value area low. Now, this is really where these numbers are. this is value area low for the day, this is value area high for the day, not the other day. So you see, we broke early on, we broke value area low. We came back in, there's a failure. We didn't even make it here to where this formula believes the pivotal point is, which is central pivot. We didn't make it there. We broke back below, and the easier thing to do is to sell the market, because whatever is happening, the market is telling you price levels, and the numbers are telling you that the market believes there's a better value than this value area from the prior day. All of these are in the round and whole numbers indicator on our site for free. I just done a quick synopsis of all of them. All of this data is just going to be compiled by different formulas, but they're all just based on the prior day. That's how you can instantly look at a market, any market, and once you understand the numbers, you can read the market and you can see what is going on in that market based on the price levels themselves. Now, let's talk about when I put a little more on the chart and I've added these deviation levels. My half deviation levels I'm denoting with these little space lines, and solid deviation levels are the numbers like 1, 2, 3, etc. Okay? What you can't tell with just pivots is when a pivot is strong and when a pivot is weak. Sometimes when I was trading S&P and I was tweeting about it, I would say, oh, the pivots are weak. The pivots are weak if there wasn't much volatility the other day. The pivots are stronger the next day if there was a lot of volatility the other day. But you need more data than just one day in order to arrive at an objective opinion of what's volatility and what isn't. The deviation levels will help you to arrive at something objective, and hopefully it'll make volatility not as scary, especially in crypto. This is Euro USD, and you can see we get up here. Here's +1 deviation. We stop on the dime at +1. What were we already above? We were already above central pivot. Remember this green dot here, central pivot. What else does this tell us? This value area high, okay? This area here, that green line, that solid line, and I don't know if you can see it, but that's also half deviation. There's a little blue line and it's right there. Sometimes I'm talking about breaks, and I really don't dig trade and breakouts because sometimes they can turn to fake outs. But if we're above central pivot and all I'm looking at is price levels, that's already telling me that the market is moving higher than that central price it was at yesterday. And then we forcefully, you see this big candle here, we forcefully finally break through value area high, and look, it just so happens that 1/2 deviation is right there by value area high. So that's a good place for me to, if I dare, take and trade a break. Now I might could have got, close to 20 pips, or I could have waited until we got up here, because I've said this in a lot of videos. Most of the time we're going to get to a +1 or a -1 on the day. Not every day, stats not gospel, but these are good levels to look at. What's here R1's here, +1 on the divs is here. This is when the pivots are strong, because their R1 is all the way up here with this +1, which is based on, I'll give you this much information. This is based on the past 70 days. Okay? Not just one day. This is a formula that's derived from the past 70 days. So that helps us to look at volatility more objectively. And you can see we reacted here. There were guys that are willing to sell at resistance level 1, because this is a strong level and it's supposed to be a resistance level. Is derived from the pivots. Maybe some guys, they haven't hung out with options guys or floor traders, and they're not even aware that this is also the +1. That's where your edge comes in. Good tools, they can mean, okay, you're going to lose trades. Everyone loses trades. I don't lose as many trades now because I don't take as many trades that are probably going to result as potential losses. Like, if I see we're above central pivot, I'm not finna look at this little fake candle here and say, yeah, let's go sell, because I've only got 15 minutes, and if I don't get out in that 15 minutes, I'm probably gonna get stuck. I'm going to say, wait, there's central pivot right here. We're right by a pivotal area. I need to wait and see what happens at this pivotal point, at this pivotal price level. Okay. Understanding these levels, using these levels together. When you see this R1 and this +1 deviation, that's confluence. Confluence is where you've got two different reasons or tools, and they're both meeting together. They're confluent and telling you the same thing. That's why we got a nice reaction at that level. And that's basically how you use these levels. I've put these on a chart. Let's look at this day here. A huge candle. We just burst right through value area. I won't count that value area high. That wouldn't have been there. This pivot is the right pivot. So we burst through central pivot. Then we were already below half deviation. When we break a half deviation, that's my first sign of, oh, okay, we can break out here and we can go to a whole deviation. That's when I set my targets. Now, there's central pivot. On this day, central pivot was a little lower. You know, you don't always have those perfect confluences, but they'll come around sometimes. We burst through and we just ran. That's 15 minutes. That's 30 minutes between these two candles, and we hit support level 1. And look, right down here, this is -1.5 deviation. We hit this to the nail, and it also happened to be right by this round number in the next 1, 2, 3, 4 hour, that complete hour. We move back up, and that's 10, 20, almost. You could if you squeeze it out perfectly, let's say it would have been 30, but I would have left, to be honest with you, at when we return to central pivot, because I know what a pivot is. We talked about it at the first. It's that pivotal area where we can reverse and just turn around. That's how you take these levels and combine these levels and use them to build ideas once you understand what these numbers mean, and use them every day in your trading to formulate plans and to understand what's happening in the market. You can tell off these levels, whatever the price is that day, is the market up? Is the market down? Have we had a failure at central pivot? Is it a failure at half deviation to the upside? A failure at half deviation to the downside? If we're usually supposed to get somewhere around one up or one down, and that's reasonable, you know, that's going to be in some cases extraordinary volatility, but that's when you're in the realm of possibilities. The probability here says, well, we're probably going to get a half, and we're probably going to get a half this way, because these are the things that have more than 50% probability. That's when I would look for breaks. And that's why sometimes you'll see me on my Twitter talking about breaks in the market. You can see we're still going down there. There's nothing there but just price action, just the numbers, just the levels of the numbers. That's the only thing that I was basing my little hypothesis on. It can be just like what we saw in the intro on the numbers, just reading the numbers. Once you have these numbers on your chart, the video is interfering with updating this. I wanted to pull Bitcoin over and put it on that chart, but that's all I had to share, guys. I hope this has been informative. I hope this gets some ideas going. I hope you guys will come out and support the site with the new deviation levels with percentages that we've put up. Often you hear people talk about the probabilities of staying inside of one, but for me it helps to actually have the calculations and the numbers crunched so that I know what's the probability for each pair. And you'll see sometimes in another pair there'll be a better, like there's a better probability for staying inside of one, or a negative one over here for Binance than there was for Bitcoin. There's maybe about the same. There's a lot of correlation. Well, might be a little better for staying inside of the numbers on ETH. Cake, you'll see there's 35 there. There's 38 there. So it's kind of 50-50 either way. I've talked about how to read these levels, but you see, I'm not even looking at a chart yet. I'm just looking at the levels, and I just explained these are the levels. These are what you can glean from that and understand that story and put it together with just the numbers. So I'll see you guys on the next video. Thanks for taking out the time to check this video out. Hope this helps someone out a lot. See you guys on the next video. Like, share, comment, subscribe. Once again, this is Alfred from amassers.com.